Alrighty, folks, welcome back to No One Asked Us, episode 33. And this week we have Melissa Langdale, who's the founder and CEO of Praxis Lending Solutions, where she works with mortgage lenders to improve operational efficiency, redesign workflows, and apply technology in practical, result-driven ways. She brings more than 20 years of hands-on experience across nearly every facet of the mortgage business. Previously, Melissa served as president of the Mortgage Collaborative, where she helped guide lenders through market shifts and operational change. Known for her candid perspective and operator mindset, Melissa focuses on lowering the cost of origination while helping organizations modernize without losing sight of what actually works. Melissa, thank you so much for joining us. So ChatGPT wrote that. The one thing that I was really interested to know was why it said that you had a candid personality. I thought that was interesting. I don't know where
it's probably because I call out ChatGPT every now and again for drifting. It's like if she's going to be candid with me, she's probably candid with other people. So.
There you go. So we always start off with how do people get into the industry? None of us as little kids were like, geez, I really want to be in the mortgage business. And I think you've had a really interesting career, and love to kind of hear about how you transitioned over it, because you started off more on the like loan production side, spent a lot of time on the originators, moved into the role of running the Mortgage Collaborative, and really helping lenders from that perspective. And tell me here where I'm wrong, but it's in the sort of later half of your career is where you've really gotten into the technology piece. I believe it's your 1-year anniversary for Praxis, right? Do I have that right?
It's really close. The 24th. So we're just a couple
4 days away. All right, close enough. Yeah. And obviously with Praxis, you've really leaned into AI. We were talking about before we went on the show. You've actually been teaching yourself how to write code to better understand the technology. But let's go way back. How does Melissa growing up decide we're gonna get into the mortgage business?
Oh my gosh. Okay, so way back. So I'm a rare bird, I know. I actually grew up in the industry. My parents were both in the industry. And because I got a chance to see the crazy, I actually did not want to have anything to do with this industry. My degree is in health administration. But the reason that I wanted to, or that I majored in that, was that I have a weird gift for numbers, like did not get less than 100 on a math test until calculus. Kind of weirdo. So like uber nerd. But I also really have a heart for making an impact and making a difference. And so I really wanted to do something where I felt like I could leverage my kind of unique nerdiness and help people at the same time. And so I thought healthcare would just be that. If I could lean into the business side of healthcare, that would be a way for me to do it. Well, life happens to all of us. And when I graduated, my husband was in his graduate program, and we were buying a house and getting married, because in my family, you don't rent, you only buy. That was out of the gate. I got a job in December. I bought my first house in February after I had 60 days of pay stubs. And then I got married in April. So it was a very big thing in our house, just growing up in the industry. Right. And so one of us had to be working because my husband was still in his graduate program. And so I told my parents that I would work for them for 12 months in between my undergrad and graduate program. And then I was going to be like, peace out. Good luck on your business. I'm done. And 3 months into it, I was processing loans at the time. 3 months into it, one of our customers called me after closing, crying. She was a first generation homeowner. She had 2 teenage boys at home, and she just shared her story with me. And I literally went to my parents that day and I was like, I get it. I finally understand why you do what you do, and I'm all in. I want to learn everything I possibly can about this industry. And so that's what I've been doing since then. I've been in operations, I've been in sales, I've built branches and areas and divisions. I launched a company from the ground up for a community bank in North Carolina, and then was recruited to build out mortgage operations for a fintech startup here in Austin, Texas. Along the same time that I was building the company in North Carolina, 2 of my mentors actually introduced me to the Mortgage Collaborative, which you started to talk about a little bit earlier. Got very passionate about the organization because, as I was building everything at that point in my career, I had a lot of sales, a lot of operations, a lot of compliance. Like I knew all the outside facing logistics of how to run a mortgage company, but like cap markets, like Andrew's wheelhouse was like, it was like a foreign language to me at the time. And I knew enough to be dangerous, but I knew I was going to hold us back if I didn't have more people around me that could help me to navigate that. And so they said, look, just show up. You're going to be in a room full of people that can help. And that is exactly what that organization did for me. It was just an incredible way for me to be in a room with folks that had already built what I was trying to build. And they were just gracious with their time and fed into my billion questions around cap markets and all the things that, we try to navigate over the years. So served on their board of directors and then stepped in, like you said, as their president and COO. When I stepped into that role, I really had 3 main objectives. The first one was, back then our cost of origination for our industry was somewhere around $12,000 to $13,000 a loan. And so it was right at just about the peak of our industry. Now it's come down some, mostly because volume helps, right? But also technology has started to make, some impact in that. But at the time, it was really, really high. So one of my objectives was, look, I really want to be able to help our members lower their cost of origination. The second was I really wanted to help people to grow market share and revenue wherever they possibly could. And then the last was I wanted to give people a seat at the table where they didn't feel like they had it in other places. Now, that is core to the foundation of how TMC operates. They I'm sure are still doing that today. But it was also the foundation of an advocacy platform that I kind of built out for TMC with our members. Now, I'll tell you, advocacy is a little bit of a loose word. We really did just build great relationships with FHFA and CFPB and Fannie and Freddie and Ginnie and HUD, and wanted to be able to have a place for our members to have a seat at the table when challenges came up with their business, that they could actually make some progress towards those challenges. So all that, take all of that aside, I also recognized in January of last year that we really were at a unique kind of precipice in the industry where, all the things we've been working on from a technology perspective, really, we had technology players that were entering this space that hadn't had mortgage experience. And there was this kind of unique need for lack of a better word, a bridge, a translator between, kind of what mortgage was trying to accomplish and what technology companies were trying to solve for. And I really recognized kind of a unique opportunity to step into that space and really help as many lenders as I could to navigate what's coming and prepare their companies for the future of mortgage banking. And so that's why I launched Praxis a few days shy of a year ago. And I know like preparing for the future of mortgage banking is like some giant, big, broad term. And I'm very intentional about it because I believe a couple of things. I believe that we have a unique opportunity to rethink how we manufacture mortgage loans. And I don't just mean technology. Technology is a component of that, is a core component of it, but so is our people and so is our process. And when we optimize those 3 things together, I think that's how we lower our cost of origination. And that's how we actually give consumers what they're looking for today. That kind of speed to certainty, that kind of instant experience where they can count on the yes as quickly as possible. So I know that was a big, long way of like telling you my story. But that's it in a nutshell.
I want to know, how did your parents ever fess up to paying that woman calling you?
No, they did not have anything to do with it. It actually, the whole thing happened because our processor had quit like a month before. And at that point, like, I'm 60 days in the industry. I knew what LTV and DTI was, but I mean, I was still learning all the things. I was copying packages and shipping loans out to places. And my parents were like, all right, kiddo, now you're a processor. Let's go. And so I had no other choice but to lean in and learn everything that I could as quickly as I possibly could. And we met every single closing over the next 60 days. And so that was one of my first customers that I processed. And so I just had an opportunity and the privilege of getting to know her well over that time.
That's awesome. So I think we actually should just jump right in, Chris, because I feel like Melissa teed up the question that Mina had from last week.
Oh, you're doing what I normally do, which is
well, because I got a bunch of questions that'll end up like going over Mina's question. So I feel like let's just jump right in. We don't normally go in this order, but I feel like it's fairly fitting.
Do you have it?
No, of course not.
Okay. So Melissa, the question was last. I was like, "Look at the boomer go today." So Mina is the CFO of Be Smarty. He was our guest last week, and his question for you was, if you could redesign one part of the lending process to be simpler and more human, what would it be and why?
What a great question. So I think if I could kind of predict the future and see what's possible quickly and what consumers frankly really hate, I think we should do away with conditional approvals. I think conditional approvals are going to be our new pre-approval. All the things that go into like issuing that conditional approval, we can either automate or have some semblance of credit feasibility with that loan, with all the same parameters of kind of risk adherence that conditional approval has in it, that we could issue at pre-approval. I mean, consumers care about clear to close. Like, they care about the yes, and like a firm yes. And so the faster we can get to that, the better off we all are. And I think we can solve for a lot of things with technology in that conditional approval phase. And I'm going to have a lot of people that are like, Melissa, you're out of your mind. I'm not saying it's going to happen tomorrow, but I do think as an industry, that would be one thing that would be fantastic for us to solve for. That would improve the client experience drastically.
What exactly is the big blocker there, right? Like, to your point, it's like, I mean, with technology and where it's at, like, why are we still having to even do the conditional loan approvals?
Couple reasons. Even let's say you leaned into source data, right? You've got verifications of employment, income, assets, all done up front in your pre-approval process, right? You're connecting just with source data. Then, let's say you can make a decision on all of that. They had a property as they went through that process too, right? You had everything you needed to kind of issue an approval. Well, what's lacking really is title and appraisal. So let's say you had the magical unicorn that was a fantastic credit borrower with great asset, great reserves, solid DTI. You could probably get reps and warrants over, income and asset review. You might even get that like beloved property inspection waiver, which I know is not called that anymore, but that's where my head lives. But
Code 187.
Not needing an actual appraisal on the loan, right? But you still have title work that you have to clear out before most lenders would be comfortable clearing that loan to close. So there are, even though we've solved for a lot of things in our industry, there is this kind of final step in the process that would prevent us from going direct to CTC.
Yeah, I always tell people that aren't in the industry that basically our job is to verify everything on the app is true. That's all we're doing, is ruling out the lies. Like if a 1003 was taken perfectly and there was a magic data system behind that verified everything, we would just be like, and you're done. But we're going to go ahead and verify that property, verify that income, verify those debts, and verify that employment.
But except for Melissa just notated the two areas of the industry that, quite frankly, are the most archaic and lacking in advancement, in my opinion, which is property valuations and title.
Well, again, that's just part of like verifying that piece. But I have some friends at Fannie that tell me some of the stuff they're working on is pretty crazy with some of the like aerial, like not even needing a drive-by. It's going to be borrower taking pictures soon.
Well, and I think the new UAD 36, right, is going to solve for some of this. It's laying the groundwork for a foundation to make more intelligent decisions based on data over time.
Right. Which Mace, to your point, I've kind of always wondered, on that fact is like, again, with where technology, and I don't know who it is. I'd heard there was maybe somebody, one of you guys have heard of it. There was somebody out there who's been working on a platform I had heard where a homeowner could just use their iPhone and basically walk the property, and it would be able, something in the app would be able to determine whether or not they had actually scanned the entire property or not, and then it would take all that information, upload it, and be able to have a valuation, instantaneously.
There is there's ways for us to do kind of like hybrid appraisals right now, right? Where the data collection is separate from the actual analysis of the valuation of the property. And the data collection can be done by a number of like approved sources of data collection. And so that's everything from scanning the properties, which will like measure using the technology to measure, and using technology to see condition of property, those sort of things at the same time. So yeah, there's tools like that available now, and other industries use them on a regular basis. Insurance companies,
right?
Yeah. It's
can't they send a drone over the house and just be like, do a quick scan of the property?
Well, but you still need the inside. That's the problem, right? You still need to understand the interior, like the actual interior of the home. But like one of the other things, and I was talking to somebody, as you mentioned at the beginning, like I know capital markets. It's funny how little I know sometimes about the front end piece. But somebody was explaining to me that basically like, there's no regulations around realtors and the data that they collect and publish on homes that are going up for sale or something to that effect. And so like there's the way they were explaining was that like there's a huge gap in the amount of data that's actually the accuracy and the totality of data that's being uploaded to MLS, as an example. Right. And like that would be one place where you could solve for that. But you have this look on your face like I'm completely wrong. So maybe
I think there is some regulations around like what they're, because there's in some areas where their hands are tied on what they can disclose, and then there's other areas where they're allowed a variance. But I mean, if they, for example, said a property was 2,000 square feet and it's really 4,500, that would be an issue, and vice versa, right? If it was 4,500 square feet and it's 2,000, that's an issue. But
right.
If they say 4,500 and it comes out at 4,436, like something like
There's
that.
There's tolerance.
Relatively small, but I mean they would. That stuff comes out in the appraisal process and all of those sort of things anyways. But yeah.
Right. But it does come back to like, how do we get a better, methodology of the data, that's around these properties, right? It's like, we come back to title, which again, blockchain. I know it's not something we talk about on the show very often, but I have always,
It's the B word.
The B word. But it's a great use. It's a great use for blockchain, in my opinion.
Great use for blockchain.
I mean, I don't understand why we haven't, at least I haven't heard of anybody who's gone there yet. Because the title process is, I've been doing this for 20 years, and that's been the one area where I've just constantly been like, This makes absolutely no sense whatsoever.
Well, it's property record data, right? So, I mean, that's all stored at county courthouses, and some of them aren't even approved for like e-recording right now. So, I mean, there's things like that. Then there's things like there's laws that have to actually be adjusted at the county and the state level to be able to allow for a source of truth to be seen in that blockchain.
Right.
The blockchain to be seen as a source of truth. Sorry. So there's regulations that have to change, and then there's getting down to the county level.
Wasn't there some federal reg years back that was like mandating that municipalities all have all of their records online by a certain date? Do I have that right, Chris?
I don't know, but if it wasn't for COVID, we would be 10 years even further behind than we are now. Like,
I agree.
That's a fair point.
So PK, you never got to deal with like actually processing loans, but I know I just got to ask Melissa if this is also a guilty pleasure. Anytime you get a file, you're just gonna look at the appraisal photos. You do. You look at
Oh yeah.
PK, you'd be surprised at what people will leave their house in the condition. You're just like, maybe a little cleanup. Like, I'm not asking for something fancy. Some people are just like, fuck it, I don't care. Just this place will be a total mess. You'll see crazy stuff in an appraisals.
This is as they're leaving their property and like selling it.
Yeah, their appraisers coming in and to a house, and then there's just that stuff everywhere.
Oh, the best was when I was early days at Clayton, I did only scratch and dent. Like that was all I did. And yeah, you can imagine like there were some pretty entertaining photos coming out of those appraisals.
Whenever we side note, whenever I brought my son home on oxygen, after we left the NICU, we're asking questions like, is there can you get like 2.5 to 3 feet like wide of a path to the spot where this will be? And I was like, oh my gosh, this question is basically, are you a hoarder? Because we were bringing it there, they were bringing him oxygen because he was coming home on oxygen. Like, we have to be able to get the tank through 3 feet of space. I was like, gosh.
Well, we know what the homes in Utah are like. Okay, if you could eliminate one step from the mortgage process tomorrow, what would it be?
Are you asking me or everybody?
No, I'm asking you. After I take a cheap shot on Utah.
Yeah, I was distracted by Utah.
I don't know how Andrew can throw shots at Utah when he lives in Indiana. Anyway, go ahead.
No, what you should have said when I'm from Florida. I mean, come on.
Yeah, you're from Florida, living in Indiana, showing shots at people.
As long as you don't throw Texas in the mix, I think we're okay.
Yeah. Don't mess with those people.
Don't mess with Texas. If I could eliminate one part of the process.
Yeah, one step in the mortgage process. What
pre-approval? Other than the pre-approval,
other than title.
Well, to be fair, I just eliminated like 90% of the process. So, yeah. I mean, I think, Chris May said earlier, you're in this phase where you basically you're having to re-verify everything that's on the application for a lot of good reasons. We all know why, but I would say the gathering of documents, I'll leave that big and broad and say we have to connect with source data, as often as possible. So, yeah.
Melissa, what is your ideal client? You tell us like who is a good fit, like someone you're just like, hey, this is where you're at. Praxis. Here's a free plug for you, I guess. Like where's this is where Praxis is very valuable for you.
I've got clients that are very small community banks closing, less than 100 million a year. And I have, clients that are very big in the top 50 mortgage lenders in the country. So it's all over the map.
About what part of the process would you say you helped bring them a lot of value to then? If it's not related to volume so much as like, if this is a difficulty you're experiencing, come pay me.
It's more about folks needing to navigate change, right? I mean, our industry, whether that is operational change or technological change or workflow change, all of those things come with a lot of complications. And so if you're at the point where you're thinking, holy crud, I don't just need to bring in a new CRM system, for example, I actually need to rethink our customer journey. That's a different, a different type of change that your organization is going through. And in those cases, that's where I can really step in and help.
So you've been doing this a year now, or about to be?
Yes.
Okay. So I think it was about the 1.5 year mark when I realized nobody has this shit figured out. Like I just kept moving up to then I was in the top 15. I was at Academy and PRMI, which is why I'm in Salt Lake instead of Texas now. And I remember being at Academy and I'm like, oh yeah, they're chief compliance officers. They're gone now, so I can talk crash. And I'm like, he's going to know what he's talking about. And I was like, what is happening? Like, I'm over here just like pulling up reg after reg and telling them all the things that were wrong. It was pretty interesting. But it's funny how you always think the next person's going to have it figured out, but they all have different parts figured out.
Wait, that's not why you're in Utah.
Well,
if your wife hears this episode, she's going to be really upset.
So in 2015, Melissa, there was this TRID thing, and I was consulting, and there's a lot of mortgage mecca here. And one of my clients, Citywide Home Loans, the compliance officer, was beautiful, and now she's the mother of my children and my wife, and I live here. So mortgage through and through.
This all makes sense.
And she's like, "What do you mean?" Yeah, sorry, babe, if you're listening.
Oh, we know she does not watch the show.
Yeah, she doesn't.
Melissa, I'm curious. As you're seeing the process side from the operations perspective, you're like super involved in the tech side. Based off the post you're talking about, like I see you're like on the front end there. I guess like what are some of the like mortgage companies have all the AI hype kind of like being thrown at them right now, being told that they're maybe, I think the general feeling is everybody's behind, and then there's some magic pill out there that's going to solve all their problems. I guess like what are you seeing from your perspective of like how should lenders be really thinking about the AI word and leveraging technology and change management, and like is it really a magic pill, or how do you actually like kind of like from a grounded perspective think about implementing some of those tools, or if they should be implementing any of those tools, or should they just be implementing a lot of the basic stuff first? Kind of like what's your take there? I have my own bias. I think the guys have their bias too here. Which I'm sure you would probably agree with, but would love to hear your take.
So I don't believe there's a magic pill, newsflash. I believe we are at a point where our industry is going through a lot of change. And I think every company is going to be very unique in what's going to be valuable to them. I think at this point, it's about leadership and digging into the details of how they operate, where every dollar that they spend goes, what the most valuable pieces of technology are for them, and analyzing how to move forward through all of this change. So I tell people all the time, and I spend a lot of time on LinkedIn talking about AI. I'm a huge fan. But AI is a solution. It is not the solution. And so I want to make sure everybody's really, really clear on that. Really, it's about realigning our people, our process, and technology. And that sweet spot is really what helps companies to make the progress that they need over the next, year or 2 years. It's just lean into the areas that can lower your cost of origination, that can remove pain points for your team and remove pain points for your customers. And as long as you're making progress on those two things, you're going to be in a good place. Now, I'll tell you the areas that, are accelerating faster and faster and faster there is a widening gap from those that have been investing in AI and automation for years, and those that are just starting to lean into it now. Now, the lenders that are just starting to lean into it now, the good news is there's a fair bit of you in the marketplace. And so we as an industry also have been closing loans in 30 days for as long as I've been in the business. We've been closing loans as 30 days for as long as my parents have been in the business. Like, the expectation of consumers going through our process is that we still close loans in 30 days. Now, back to my widening gap comment. Those that have been really leaning into automation and AI solutions, they're going to start being able to churn those loans a lot faster. Now, people are still going to close in 30 days, but they're going to be able to give them a yes super quick. And so that's where the answers, I think we're going to start to see a little bit of a widening. So the faster you can start to adopt some of these things by placing them in the right places for your business. And I'm very intentional about saying that because not everybody's going to have AI in the same place. They're not going to have automation in the same place because they might have different risk thresholds or they might have different like service expectations. And so, as many places as you can, making those decisions and leaning into a way to speed up the process and lower your cost of origination. I think if you're moving towards those areas, move towards them quickly, and you'll be right in the same realm to be able to compete.
So for the lenders that are investing a ton in AI and technology, that version, and then the companies that are not, maybe they're kind of like the other group, right? Like they're like catching up, right? What are you seeing like the best practices from the companies that are investing tons of money on that and are, I guess, like leading that front? And what can like lenders that are maybe not doing that yet or kind of preparing for that, like what would you tell them to, how do you like get the soil ready for all of that?
Well, one of the quickest ways to step in, I mean, if you're at the point and you're starting to think, holy crud, where do I start? Lean into an IDP solution, right? Something that can give you an intelligent document processing. So lean into a solution that can give you the ability of, classifying your documents, indexing your documents, extracting data from your documents, putting that data in your, LOS directly, even starting to do calculations based on that data or flagging, early conditions based on the data that is pulling those, from those documents. That's a really great, easy thing to step into that doesn't, it's not a generative AI or agentic AI solution that requires a little bit more oversight and training and all of those sort of things. These are platforms that have evolved pretty well over the years. And so the risk, is fairly minimal and can give you a huge lift operationally. So, I mean, that would be a great first place to start if you haven't gone down that road so far.
Yeah, there's a lot of times I come across processes where that should be automated using like an API, but it's just a human copy and pasting data from one system to another. It's like, oh, that's kind of sad. There's
a lot of places in our process where people are doing work like that because it's the work we've always had to do, right? And there's lots of different ways that we can help to automate that now.
Right. And AI is not the solution to everything. PK linked me an article today. It's great. The title of it is called "I Will Fucking Pile Drive You If You Mention AI Again." And it's a very long, amazing, well-written.
What are you talking about? AI is the solution to everything.
Bless your heart.
Oh, that's a Texas Melissa, bless your heart you just got there.
Yeah, we all, and remember, Melissa, I lived in the Carolinas. I know what bless your
heart. I know. And that's not always what bless your heart means, y'all. I just
but most of the time. But most of the time. So I'm wondering if you're seeing this as well. We've seen this is there's a lot of organizations that are doing like major changes, like new LOS, new POS, new CRM, because we're seeing we're seeing all these cool new, LOSs and POSs and CRMs, and even some of the older ones who are coming out with really new cool stuff. And so all of a sudden people are getting wrapped up in like a major technological change, right? And like I've never gone through an LOS change, but I've heard enough from the industry to know like it's not something you ever really want to do. And I'm wondering if you're seeing that that also holding back some organizations on their AI plan or their ability to research and institute some form of AI into their process as a result of that.
Well, a lot of the times when they're going through those major changes, it's because the new technology that they're going to is one that has AI native in it or has an IDP solution native, right? And so I don't know that it's necessarily holding them back if it's giving them a firmer foundation for, which they can launch new things on in the future. It depends on all the things that they're launching, of course. But yes, I see a lot of people considering new solutions right now that are either streamlining how many vendors they need for something, or like I said, natively integrating AI more in whatever the platform is, whether it's your POS or LOS or CRM.
Are you seeing on your front more executives like pulling in line level employees into these conversations of where AI makes sense, right? Like I think a lot of times at least in my experience in my career, a lot of times technology decisions can be made a little bit too high up, right? Which one impacts adoption, but also two, like how do we actually use this thing, right? Like I actually had somebody who asked me the other day, like our platform, and they were like, well, how would we use it in our organization? And it was really, it was kind of funny because I felt a little bit caught off guard because I had never had anybody like ask me that directly. But like, to me, it's like, it's the line level employees who live the day to day of the manufacturing. So do you feel like you're seeing more of that with collaboration, or still a little bit, that's still something new for folks?
It's a little bit, of a mixed bag in how people are approaching it. For folks that I talk to, I always recommend it. I call them like building your change champions. You need folks at in every department. You need a very diverse group of individuals to help you to navigate that amount of change. They need, not only to give the tech vendors a regular feedback loop, they need leadership to give them a regular feedback loop. And then they need to take, the excitement and the possibilities of what's coming down to their teams, right? And help you to navigate that change at scale. And so, I talk about building those change champions and having those regular like meetings with those folks as you're navigating big things like that. It's different if you're just bringing in one little new vendor to solve for, a very specific pain point, but communicating how you make that decision with the organization, like why is that the pain point that was chosen to be solved? That I think requires a much different, approach, and having that kind of group of change champions, I think, can make a huge difference.
Agreed.
I have a follow-up question to that. Andrew, what are you going to say?
No, go ahead.
I was just going to say, like, if you're a leader, how do you communicate? Because I think there's like this narrative, like it's of job loss, in the just generally broadly speaking with AI. How do you communicate, or what have you seen successful companies communicate the use of whether it's AI or other technology, which does automate a certain task that used to be done manually? Now it's done in seconds through an API or AI or whatever you want to call it. How do you see successful companies communicate that to their teams? Is it top down, bottoms up? Is it collaborative? Is it, hey, you used to do this manually? You no longer do this manually, but I'm going to have you do this other thing that we didn't have time to do before, and now we can finally do, and our clients are going to get this new experience. Or like, what are you seeing? Like the, I guess maybe not the necessarily right way, because I don't think it's a one size fits all, but what are some of the best practices you're seeing across the board?
I think that fear generally comes from ambiguity. And so the leaders that are navigating this really well are creating clarity for their teams. How is this new change going to impact my role? How am I going to help in making this decision? How will my role change as a result? Like, am I just changing tasks, or am I now expected to have a pipeline of 25 loans instead of 20? Or 40 loans instead of 20. When their brains are going in both of those directions, like, is it 40? Is it 20? Like, can I actually handle 40? Like, is leadership, helping me through this decision, or are they just driving more operational efficiency and expecting me to do more with less? And so I think creating that space where you can have a really good open dialogue, and creating that space where you can create clarity with your teams, goes a really, really long ways.
You nailed it right there. Ambiguity is what creates the fear, for sure. Yeah. I mean, I'll just talk like from our product. We haven't seen every single organization we work with, they've had zero layoffs. They already are lacking in bandwidth most of the time, where it's like, it just creates opportunities for people to do more, and quite frankly, to do the things that they want to do. Like, somebody please show me an instance of AI doing something that humans actually want to do. Like, really, truly.
That's super fair. I do think the things that people want to do are because they fear their roles changing. And I think it's healthy to say your roles are going to change. Every one of us on this call, our roles are going to change. Our impact to the industry is going to change over time because of artificial intelligence. And so it's healthy to just say that. New roles are going to emerge, old roles are going to go away. And so I think we're going to see new opportunities come up through all of this, and it's healthy for us to talk about it.
Yeah. I mean, I've written on LinkedIn, I've written a couple of times about this, but the ATM is literally like the best metaphor for this situation. Like, prior to the ATM, the only job of a bank teller in a bank was to give out money. That was the primary role of a bank teller. If you wanted cash, you had to go between 9 a.m. and 5 p.m. on a weekday to the bank, fill out the little slip. PK, I know you weren't born yet.
I was waiting back to boomer jokes.
We're just getting boomer. We're going boomer, hardcore boomer over here. In the 1960s.
No, I got to counter to that, Andrew, because I worked at the community bank.
The ATM came along, and all of a sudden, everybody was like, "Oh, we're not going to need tellers anymore," right? And that is not the case. What has actually happened was the tellers got trained to do a lot more things, right? And now if you go into a bank teller has, and quite frankly, bank tellers as a result get paid more, right? So like, that's what we when you look historically for any of these technology changes, right? It, generally speaking, there is typically a period of a little bit of pain, but generally speaking, it elevates people's roles where they're doing more meaningful work than they were before, and they make more money. And I think that's what we're likely to see, here from that perspective. So
I think one other topic kind of tangential to what you guys are talking about there is like creativity. Like, I think traditionally this is kind of seen as like a manufacturing process where you have like uptime and downtime. And so like the idea is that all our employees are going to just work at 100% uptime. And then what ends up happening is you just kind of get like this cog in the machine kind of feel. And then when there's downturns, you just get rid of all these people because you no longer have utilization for them. I think that's maybe the wrong kind of like framework to think about it from. And you don't necessarily want 100% utilization, because you want a little bit of downtime so they can think about creative ideas and new ways to solve the problem. So I think you need to have like that space or buffer to be able to like give the person enough time to actually like think about other ways to solve the problem, rather than just like getting 100% utilization where they're just kind of like this cog in the wheel and like just trying to like chip away like a specific Excel task or copying and pasting data from one system into another. So I think that doesn't get talked about enough, but I think it's a huge component of this.
I agree.
Shout out to Suha for giving all of our good comments here today.
Where do you feel like lenders overestimate the value of AI, and where do they underestimate the value of AI?
Oh, good gravy. This is a hard one. So I don't know. I think there is still a gap in the hope that AI can bring and the reality of how we're leveraging it today. And so I'll say, that's where I think your question is kind of stemming from. Like, what is that gap? And I think some of it is our industry still has to evolve to a point where we can really take advantage of some of the possibilities. I think the other thing is, to everything PK was just talking about, the more, if we had expectations, each one of our teammates was going to be at 100% capacity, number one, that's never realistic of anybody running a company, right? People have to take vacation and all those sort of things that come into our space. But when we start to think about how we leverage AI, if we partner our people with AI, that kind of human intelligence plus artificial intelligence equals magic equation that we always talk about on LinkedIn. I think that's where like the sweet spot really lives. I think understanding that AI gives our teams elasticity, gives our companies elasticity to better respond to those like market-induced volume fluctuations that we know just naturally happen, right? As rates dip, we know we're going to see a spike in refis. And how our teams adjust to that, right? How our companies adjust to that is going to be really critical. And so I think folks see AI as the solution to all of those things, right? I can create elasticity, I can lower my cost of origination, I can do all of these things that I've always wanted to solve for within my organization. I can improve sales productivity through, higher conversion rates. Like there's every pain point I've ever thought about. AI could always solve for these things. But the reality is, we're not solving for all of those things. We're solving for this one little thing at a time. And so I think we have to remember, I'll use a very Southern phrase, but one of my friends always used to say, life is a cinch, inch by inch, but life is hard, yard by yard, right? And so, when you
Never heard that one. Never heard that? No, I've never heard that one.
Okay, well, I'll just got like Southern fat. I know that's not really a word, but
we got good gravy. Oh golly, good gravy, along with the bless your heart and
Southernism in the midst of all of that.
I'm feeling bless your heart.
I think that's the reality of it. I think we have to, the bridge between kind of the hope and the reality is, what are we biting off today? And how can we continue to, make progress?
Right. Well, and you and I have spoken about this on stage before, which is also be careful of what people are saying they're doing, right? Yeah. Like I always, anytime a publicly traded, and I'm not picking on anyone in particular, but anytime a publicly traded company's CEO is talking about what they're doing in AI, I'm always like, all right, like I'm not sure how much of this is really for shareholders and how much is, actually true. So that's the other thing I feel like for people to kind of take as a grain of salt. So
yeah. So with that, what is the most common struggle people are dealing with, Melissa? Would you say is most common across the spectrum?
Across the spectrum? Oh, that's a really good question. I mean, right now, I'll just topical would be governance, AI governance. How do we evolve kind of the, basic AI policy that we've always had into, what Freddie's really going to expect. And that's coming super quick. I mean, March 3rd is our deadline for that, right? So understanding the different types of AI solutions and then how we govern the ones that need extra governance. I think folks are having questions about that right now.
How are people? It's interesting. Like what we've seen is we either get the full search, tell us everything, down to microscopic detail, or we get no questions. It's really kind of interesting to me in terms of like how people do seem. But I also feel for organizations, because it's like, granted, Freddie did come out with something, but when we talk on a federal level, we still have absolutely nothing. There's no framework whatsoever. And for a lot of these smaller organizations, right? Like if I'm an IMB of, call it 100 to 200 employees, right? I probably don't really have the bandwidth to be worrying about AI governance, right? And now it's like, and on top of it, it makes, TRID look easy, quite frankly, right? Because it's like, we just don't know what we're even supposed to be, where's the ball bouncing, I guess. We don't even know from that perspective.
Well, and the other challenge I think executives have is, a lot of vendors out there are saying they have AI. Well, what type of AI is it? Understanding those differences and understanding where you're leveraging it in your system can help you to have the right approach to your AI policy and governance structure. If you don't kind of dig into that layer, then you might be trying to govern an IDP solution the same way you're trying to govern an agentic AI POS that's customer facing. Those two things need 100% different approaches. And so I think, those are the things I would tell everybody to be aware of, is be really clear on the AI solutions that you have within your, kind of domain. And then things like, generative AI, agentic AI, if they're a tool for your team and your team is still responsible for validating the information that is being generated by the AI, right? Then your risk is relatively low. Also, you're not getting the most out of your technology, but we'll get into that at a different time. But if you're leveraging it for customer-facing interactions, like those are things, or credit decisions, those are things that need extra layers of governance to ensure that it's making the decisions and communicating in a way that you would really want it to. That would be a reflection of your brand and a reflection of what regulators are expecting. And so I think those are just critical things folks need to think through right now.
We are, interestingly enough, and I apologize, I can't shout them out because I can't think of the name of the company right now. But we are seeing the emergence of AI insurance around systems that people can now purchase, which basically, and what those companies are also doing is effectively think of it as like a SOC 2 for accuracy of the engines themselves. So they're actually coming in and doing like thorough testing of whatever the platform is. So I mean, that perfect example, right? An entire new industry which is popping up, as a result of this.
Well, and those things are helpful, but who's going to retrain if there are findings? And does your vendor agreement actually go through that process of saying who's responsible for retraining that platform if there are findings that come up? Is the vendor responsible? Are you responsible as a lender?
Right. No, that's a good point. Yeah.
And so I think there's things like that we have to dig into as an industry.
Melissa, can you talk a little bit about you coding and learning how to code, and like what can you share a little bit?
That's a great point.
I would rather not.
Most people don't do that, so I'm curious to learn.
I told you I was an Uber nerd. And so I think if I'm going to speak about something, I have to understand it to as much of like the core foundation of how it operates as possible. And so I've been teaching myself Python.
Okay.
Perfect language. I mean, perfect language.
Quick question. Who here knows what SOC 2 covers?
It's one of the
most BS regulations. Compliance people are usually so stupid, and I have to tell them what it really covers. And I'm like, we're PCI DSS compliant. And they're like, I don't know what that is. I'm supposed to check a box. But like, you know what SOC 2 covers?
No, I will raise my hand and tell you that no, I don't know it in its entirety. What I do know is that it costs more money than I want it to. And here's the big problem is now we're seeing the emergence. PK and I were talking about this the other week because PK we were talking about who they're using, who we're going to use, who other people are using. And now we're seeing the emergence of these like AI SOC 2 companies that are popping up. And here's, you're going to laugh when I say this one, is who regulates the people who give SOC 2s? So like, what is it to say? Like,
don't they have to be certified? There's like a certification process for them, right?
Oh, is there? Oh, I don't know.
There's like the AI CPA or ASCPA or something like that. It's like this like governing body that said, hey, this is what SOC 2 is. And there's like these audit firms. And then there's like the platforms like Manta and Drata that like actually like help you generate those policies and like monitor and things like that for like, monitoring period. But Chris, to your point, I don't know all the fine details. I just know how it's structured.
It's basically like nothing to do with real technology. It's like, do you do background checks? Do you have policies and procedures? It's a very
it's built by an accounting and CPA organization.
Yeah, I mean, it's not a terrible thing to have. Those are good things, but when you're like, when we were talking about the stuff we were doing from the hypersecurity level, with our blend integration, it was like, hey, we're touching thousands of loans a day on the most secure stuff out there in the world. Like, there's more important things than, anyway.
Well, can I ask you a question then? Is that okay? Do I get to ask y'all questions?
Yeah, of course.
So ISO or SOC 2? Which one, like, do you have a preference over one versus the other?
I will tell you from my perspective, everybody asks for SOC 2. Like that, that's just the go. It's
Like
so ingrained in people's heads that like that's the first thing out of their mouth. They're like, oh, do you have a SOC 2? Like immediately. And the other thing that people don't, I think,
I would do C, which would be like PCI DSS, which is like, can you handle credit card information?
Right. But what's interesting is most people think that you can just like spin a startup and get a SOC 2 a week later. And they don't realize like that there's a data collection process, that like this is something that actually takes time from that perspective. So that's the other thing that like is a little bit tough right now. Like we'll have our SOC 2, I think, in March. But like there's a no shortage of AI companies out there right now that they're just too young to necessarily even, already have their SOC 2, which is why, and granted, I'm biased on this one, but I do think if you're looking at AI companies, it's important to look at people who have previously built enterprise grade technology in the financial services space, who actually understand, what goes into handling, the type of data that, we all handle.
Well, I think, and this goes back to, I think, a point we were making earlier. I think that there has to be a little bit of a difference of vendor due diligence process for AI vendors. A lot of them are early stage, like you said. And so depending on where you're using them and how you're using them and what type of technology it is, you might be okay with mitigating some, risk of them not having SOC 2 if they're, I don't know, building a scenario desk, for example, for you. They're not handling consumer data, right? They're likely pulling information from relatively public sources. And so, in some cases like that, you might be okay with it if it's not, handling those really sensitive data points.
What I have found is organizations with more experienced CIOs, maybe it's the best way, aren't as worried about SOC 2. They're actually more worried about they want to see the compliance. Like they don't want to just see the piece of paper that says you're SOC 2. They want to see your compliance manual and security protocols.
I'm going to start a new company. It's going to be called like, this is not a grifter AI company cert. Like, just ask a basic, let me talk to your data scientists and let me just question them for 5 minutes and be like, okay, not grifters. Are you NG compliant?
That is true. Okay, we only have a few minutes left. And there's one thing that I'm really curious to get your take on before we ask you the last question, which is, what is your take, and I'll try not to be biased when I ask this question, on organizations whose AI strategy is a enterprise GPT account?
It depends on what they're trying to solve for, right? So I don't know that I want to answer that one, Andrew. I feel like you had a reason for asking me.
No, I'm just curious. I mean, I have a very strong opinion on this.
I know you do. And so, yeah,
I think it's a terrible idea personally.
There are some things that GPT does really, really well, and there are a lot of things within our space that we need other solutions for.
Right. Okay, fair enough. All right. So next week, our guest is the great Kobe Hakalier from T360. What is your question for him?
I'll do a version of the question that Mina asked me, and it's my favorite question to ask folks. So it's if you had unlimited resources, like a blank check that actually could be cashed, but you could only fix one thing in the industry, what would you fix? It's a little bigger picture. Mine was a little operational. I'll make his bigger picture.
All right, there we go. Chris, I actually typed it out so that we know. We used to have this problem, Melissa, where we were like hoping, like I'm the boomer, so I was hoping that like PK would remember the question from the prior week, and it was just totally worthless. And Mace has a newborn, so he gets like passes on everything right now. So
I call it being present.
Sorry, what, PK?
I said I call it being present.
Oh yeah, there you go. Melissa, thank you so much. I could go on and on. I have like a list of questions we never got to. Over
Suhan says, plead the fifth.
Well, we can nerd out anytime, my friend.
Awesome. Thank you so much. I really appreciate it. And folks, we'll see you back here next week for episode